Why are you leaving money on the table? Have you ever wondered why some people seem to make money effortlessly while others are stuck working paycheck to paycheck? Imagine you've saved up $1,000. It's a decent start, but you know it's not going to get you the luxury lifestyle just yet. So what do? You could put it in a savings account, but inflation will quickly chip away at its value. Or you could invest it. But where? With so many options, stocks, real estate, crypto, and more investing can seem overwhelming. The reality is, investing isn't a gamble if you do it right. It's about strategically making your money work for you over time. The best part? You don't have to be a millionaire to start. This video will break down exactly how to invest like a pro in 2026, whether you're a complete beginner or looking to level up your investment game. 1. Why invest? The fundamentals of building wealth. Let's start with the basics. You've probably heard people say, investing is the key to building wealth. But what does that actually mean? Well, imagine you have $1,000 in cash. If you just leave that money in a savings account, it might look safe, but here's the kicker. Inflation will slowly erode its value. What you could buy with $1,000 today might cost you $1,200 a few years down the road. Inflation silently chips away at your purchasing power, making it essential to find ways to grow your money over time. This is where investing comes in. The goal is for your money to grow over time, outpacing inflation and ultimately making you wealthier. When you invest, you're not just letting money sit there. You're buying assets that increase in value or generate income. Think of it like this. You buy a house, rent it out, and over time, not only does it bring in rental income, but its value appreciates. That's how investing allows you to generate wealth passively while still working for you in the background. The magic of investing lies in compounding. You put money into an investment, and over time, that investment makes money, which, in turn, makes more money. Albert Einstein famously called compound interest the eighth wonder of the world because of how powerful it is. The earlier you start, the more time you have for your money to multiply exponentially. The question is, how long are you willing to let your money grow before you start? Patience is key, but the longer you wait, the more you could lose. Start today, and you'll thank yourself in 10 years. 2. Stocks and shares, the cornerstone of wealth building. Now, let's get into stocks and shares, arguably one of the most powerful ways to build wealth. When you buy a stock, you're buying a piece of a company. Let's say you invest in Apple. By owning Apple stock, you own a fraction of Apple itself. If Apple grows and becomes more profitable, the value of your stock increases. As the company grows, so does your investment. But that's not all. Some companies pay you dividends, a portion of their profits. Take BT Group, for example. If you own shares in BT, you'll receive periodic dividend payments, basically the company sharing its profits with you. Over time, as you own more shares, those dividends can add up, providing you with passive income. This steady stream of income is one of the key benefits of investing in dividend-paying stocks. But here's the challenge. How do you pick the right stocks? Should you bet on Apple, Tesla, or maybe some new tech startup? Here's where things get tricky. The truth is, picking individual stocks is tough. The market can be volatile, and even the best investors make mistakes. Picking stocks requires knowledge, research, and sometimes luck. So what's the solution? Rather than betting all your money on a few individual stocks, why not spread the risk and take advantage of the broader market? That's where index funds come in. Want to find out why index funds might be your safest bet? Stick around. 3. Index funds, the no-brainer investment for beginners. If the idea of picking individual stocks feels intimidating, index funds are your answer. Think of an index fund as a basket of stocks. Instead of buying stock in just one company, you buy a slice of hundreds or even thousands of companies. For example, the S&P 500 Index Fund tracks the performance of the 500 largest companies in the US. This gives you exposure to a diversified mix of stocks, spreading your risk and increasing your chances of a solid return. So, Instead of betting all your money on one stock like Apple or Tesla, an index fund lets you invest in the entire market. If the market goes up, your investment grows. Historically, the S&P 500 has returned around 7 to 10% per year, including dividends. That's far better than stashing your cash in a savings account, right? Index funds provide a low-maintenance, hands-off way to invest, making them the perfect choice for beginners who want to benefit from the stock market's growth without taking unnecessary risks. The beauty of index funds is that they offer diversification. You're not relying on the success of one company. In fact, Warren Buffett, one of the world's most successful investors, has long recommended index funds for new investors. You don't need to be a stock-picking expert to succeed. Just invest in an index fund, sit back, and let the market do the work for you. Over time, you'll watch your investment grow as the stock market continues its long-term upward trend. Now, are you ready to let your money grow with minimal effort? The next step is as easy as signing up for the right platform and putting your money into a fund. 4. The fear factor. What if I lose everything? Here's the big question on everyone's mind. What if the market crashes? What if I lose all my money? It's normal to feel anxious about the possibility of losing your hard-earned cash. But here's the truth. Investing isn't about avoiding risk. It's about managing it. Everyone fears losing money. But what sets successful investors apart is their ability to stay calm during market downturns. Yes, the stock market can be volatile. The market could drop 20% or more in a single year, just like it did in the 2008 financial crisis. But here's the key. If you stick to your investment strategy and stay invested long-term, you'll likely see those losses recover over time. The market has historically bounced back from crashes, and investors who stay the course have seen significant growth in the years that followed. For example, if you invested in the S&P 500 before the 2008 crash, you would have seen your portfolio fall in value. But by 2012, the market had rebounded and continued to grow for the next decade. Holding onto your investments during downturns is critical. As long as you don't panic and sell during a crash, your investments will generally recover and grow over time. The key is patience and sticking to your plan. Here's the thing. Stock market returns are historically positive over long periods. If you invested in the S&P 500 and held onto it for 30 years, the odds are high that your investment will grow. Sure, there will be volatility along the way, but the long-term trend is upward. You don't need to worry about short-term drops if you're thinking decades down the line. If you're just getting started, it's best to start small. Don't put all your savings into high-risk investments right away. Start with low-cost index funds and gradually build your portfolio over time. The key is patience and knowing that over the long haul, your investment is likely to grow. Now that you have the tools and knowledge to invest like a pro, the next step is getting started. Whether you're starting with index funds, diving into individual stocks, or simply learning the basics, the most important part is to take that first step. The earlier you start, the more time you give your money to grow. So don't wait for the perfect moment. Start today. Invest in yourself, stay patient, and watch your wealth grow over time. It's all about making your money work for you, not the other way around. If this video helped you feel more confident about investing in 2026, hit that subscribe button for more tips, insights, and updates on building wealth. Let me know in the comments what's holding you back from starting your investment journey. Let's keep the conversation going and help each other achieve financial success.